1. Start with energy, explain with authority, highlight with emphasis, and with warmth. AiRWA Inc. is currently trading at exactly $1.06, showing absolutely zero change, flatlining at 0.00% on this trading session as of 1:10 p.m. Eastern Time on Thursday, November 20th. The intraday chart is painting a picture of eerie silence, a flatline that stands in stark contrast to the chaotic volatility we often see in the micro-cap space. We are seeing a complete compression of price action, effectively a standoff where neither the bulls nor the bears are willing to tip their hand. The stock opened at this level, and despite a few minor flickers in the bid-ask spread, it has remained pinned to this $1.06 mark with almost surgical precision. The immediate reaction to a 0% move day for a ticker like this is usually dismissal. The expectation is that the stock is dead, that interest has evaporated, and that the market has simply moved on to shinier objects. Investors look at the lack of movement and assume the company is dormant. That is the expectation, stagnation. The reality, however, is far more suspicious and potentially explosive. In the world of technical analysis, a doji, or a completely flat day after a period of news flow, like the rebranding from Connexa Sports and the massive partnership announcements, often signals a calm before the storm. This is not lack of interest, this is likely liquidity absorption. It suggests that a market maker or a large entity is soaking up every available share at this specific price point, preventing the stock from drifting lower while carefully not chasing it higher to alert the momentum traders. You are not looking at a corpse, you are looking at a coiled spring being compressed. Common belief suggests that AiRWA is still just a struggling sports equipment company trying to pivot. They see the ticker YYAI and might still associate it with the old slinger bag business, thinking this is just a desperate attempt to latch on to the AI buzzword. I want to dismantle that perspective right now. This is no longer a tennis ball machine company. The reality is that this entity has undergone a radical structural metamorphosis into a pure-play bet on the intersection of artificial intelligence and real-world assets, RWA. The market is pricing it like a penny stock hardware manufacturer, but the business model has shifted to what could be the trillion-dollar financial infrastructure of the next decade. The disconnect between the old identity and the new business is the arbitrage opportunity here. Let's scrutinize this flat trading activity because it is highly abnormal for a stock with this much news density. Usually when a company announces a $500 million joint venture or a tokenization partnership, the stock is ripping 20% up or flushing 20% down. To see it pinned at exactly 106 implies control. If you look at the level 2 quotes, you would likely see a massive iceberg buy order sitting just below the bid and a suppressive sell wall just above. This is classic accumulation behavior. The smart money doesn't buy when the stock is vertical. They buy when it is horizontal. They want to build a position without slippage. Today's lack of movement is likely the most bullish signal we have seen all week because it suggests that the selling pressure from retail panic has finally been exhausted and the stock has found its floor. While the retail trader is refreshing the screen waiting for a green candle, we need to look at the macro sector rotation that benefits this setup. We are currently seeing a massive capital flight towards hard assets digitized on the blockchain. You hear about BlackRock tokenizing money market funds. You hear about Franklin Templeton putting treasuries on-chain. AiRWA Inc. is positioning itself as the retail gateway to this trend. Unlike Fidelity Investments or Schwab Intelligent Portfolios, which are largely traditional walled gardens, AiRWA Inc. is building a bridge between the anarchic world of crypto and the regulated world of securities. This is a dangerous but potentially lucrative middle ground. If they pull it off, they're not just another online investment platform, they become a liquidity provider for the entire ecosystem. Let's dive into the JuCoin partnership because this is the elephant in the room that the market is struggling to digest. The headline number was $500 million. That is a staggering figure for a company with a market cap hovering around $20 million. The skepticism here is valid. Where is this money coming from? Is it real cash or just illiquid tokens? This ambiguity is what keeps the price at $1. But here's the contrarian take. Even if only 10% of that deal materializes, it fundamentally alters the balance sheet. It provides enough runway to build out the exchange infrastructure and acquire the necessary licenses. The market is pricing in a 100% failure rate for this deal. If the reality is even slightly positive, say a successful beta launch or a verified capital injection, the re-rating would be violent and immediate. The transition from Connexa Sports to AiRWA Inc. is not just a name change, it's a complete capitulation of the old business model. This is rare. Usually companies try to do both, keep selling the widgets while launching the crypto coin. AiRWA Inc. seems to be going all in. This burns the boats. It means there is no safety net of tennis bag sales to fall back on. For an investor, this binary outcome is terrifying but clarifies the thesis. You are betting on the management ability to execute a fintech pivot in record time. The individual brokerage accounts holding this stock are likely legacy holders from the slinger bag days who are underwater and confused. This investor capitulation creates a vacuum that new, speculatively minded capital can fill. Now, I want to pause and get a pulse on your sentiment because this is a highly speculative play. Comment below how many shares of AiRWA Inc. you currently hold, and be honest, did you buy it for the tennis machines or for the crypto pivot? I want to know if you are a legacy bag holder or a new entrant playing the RWA narrative. Drop a comment. Let's talk about the platform they are building. They are entering a crowded space. You have Robinhood stock trading dominating the retail flow. You have SoFi stocks capturing the neobank crowd. You have interactive brokers trading for the pros. Why would anyone use AiRWA Inc? The unique selling proposition is the tokenization of everything. The vision is that you don't just buy Apple stock or Tesla stock. You buy a tokenized fraction of a commercial building, a piece of a private equity fund, or a royalty stream from a music catalog, all on the same interface. Robinhood is dipping its toes here, but AiRWA Inc. is claiming this is their entire existence. They are targeting the crypto-native user who finds Fidelity Wealth Management too slow and Coinbase too limited to just coins. However, we must apply a rigorous reality check. The regulatory moat is filled with crocodiles. The SEC has been notoriously aggressive against platforms that blur the lines between securities and tokens. AiRWA Inc. is walking directly into the line of fire. If they launch a tokenized stock without perfect compliance, they will be shut down faster than you can place a limit order. This regulatory risk is the primary weight on the stock price. The market needs to see a no-action letter or clear legal opinions before it grants this company a tech multiple valuation. Furthermore, the tech stack matters. Building an exchange that can handle high-frequency trading of tokenized assets is incredibly difficult. If their app crashes like Robinhood during the GameStop saga, trust will be vaporized instantly. Let's analyze the technicals on the weekly time frame to zoom out from today's flatline. The stock has been in a brutal downtrend, a classic falling knife. But looking at the relative strength index, we are seeing a bullish divergence. The price made lower lows recently, but the RSI made higher lows. This indicates that the downward momentum is waning. The sellers are exhausted. We are sitting right on top of a historical support zone. If the price breaks below $1, the psychological penny stock barrier, it could trigger a flush down to 80 cents. But if it holds this $1.06 level, which it seems to be doing with iron resolution today, the first target to the upside is the 50-day moving average, currently sitting around $1.40. That is a 30+% move just to touch the trend line. We also need to consider the AI component of the name. Is it real AI or just a wrapper? They claim to use AI for asset valuation and risk management. In the online investing world, AI is often a marketing gimmick. However, if they are using AI to automate the compliance process, checking KYC, AML in real time for tokenized assets, that is a legitimate use case that solves a massive bottleneck. SoFi uses automation for loans. Schwab uses it for portfolios. If AiRWA Inc. uses it for regulatory clearance, that is their secret sauce. It allows them to scale globally without hiring an army of compliance officers. Let's look at the 13F filings and institutional presence. Currently, it is minimal. This is a retail-owned stock. That usually is a red flag, but it also means there is no institutional overhang. There are no massive funds waiting to dump millions of shares at the next uptick. The float is relatively tight. If a catalyst hits, say a press release confirming the first batch of tokenized assets, the lack of sell-side liquidity could cause a gap-up open. We saw similar moves in other crypto proxies.